stablecoins have the potential to increase the velocity of money. It's just really hard for me to imagine a world in 2030, you're going to have robots running around and spaceships, launching it. Like, we're still going to rely on bank holidays and we're still going to have wire cutoff time. None of that makes sense to me from first principles. And I think stablecoins are the first technology that enables money to move at internet speed.
You are listening to Season 6 of Stableminded, powered by Rain. Rain helps financial teams build and manage stablecoin-powered card programs. With a single API, Rain lets you issue branded cards and unlock new revenue. With Rain, users can move, store, and spend stablecoins instantly and compliantly in over 150 countries. Join us this season to explore how Visa, Crossmint, Yellow Card, Arculus, and the state of Wyoming are embedding stablecoin flows into their business. You can learn more at rain.xyz. Thank you both for joining. I'm so excited to be having this conversation. Let's, of course, just start with intros on each of you. This is the first time we've actually hosted a conversation with two people from different companies, so this will be fun. Farooq, why don't you kick us off with an intro on what you're building, and then we can pass over to Cuy.
Yeah, I'm Farooq. I'm the CEO and co-founder here at Rain. My background is mostly traditional financial services, but at Rain, we've been spending a lot of time building at the intersection of tokenized digital money, which is stablecoins, as well as traditional fiat payment rails, and really trying to bring financial innovation to an industry that has existed for a long time.
Great. And then I'm Cuy Sheffield. I'm the head of crypto at Visa. I was one of the crazy crypto people running around Visa in 2018, 2019. Got obsessed with the space. We set up a team in early 2019, and we've been making a little bit of progress every week for 6 years. And I think we are incredibly excited about the opportunity for stablecoins and the intersection between stablecoins and our existing network. Really grateful to have partners like Farooq and Rain, who are really on the forefront of how these two worlds come together.
It's awesome. When I think about two people who are individually in their own lanes, who are doing more for the space together, I mean, this combination is pretty awesome. So thank you guys for choosing to come and share with us a little bit. And Farooq, thanks to Rain again for sponsoring this season, all about stablecoin cards and payments. And this has been we've already started recording a couple of these, and it's been really fun. I'd love to hear more of how you guys met in the moment where you guys crossed paths for the first time. Sounds like that was a couple of years ago. So much has happened since then. I'd love, Cuy, when you were at Visa, I think at the time still, what was your first impression when you first got in touch with the Rain team and what they were trying to build?
Yeah, so we're just saying we think it's been at least 2.5 or 3 years. So it's been some time, but time flies in the space. I think first for context, we had been working on this idea of crypto-linked cards for really over 5 years. And we had crypto exchanges that were coming to us saying, we've got customers that are trading crypto assets. They want to have a way to off-ramp those assets. And so can we issue a card connected to a balance of these crypto assets to be able to spend them? And we said, sure, we'd love to work with you on that. So we started working with many of the large crypto exchanges and started putting some of these card products into market. Some of them had crypto assets as rewards, but it was very much a crypto value proposition. It was focused on existing crypto customers. And so when we first met Farooq and the Rain team, I think the thing that got me the most excited is they were one of the first companies that came to us, and they were crypto native. They deeply understood blockchain technology and smart contracts and how to build applications in the space, but they were focused really exclusively on stablecoins from day one. And so it wasn't about a crypto exchange that was a trading value proposition that was looking for an off-ramp. It was more about how can you build brand new financial products that could be general purpose, that could be mainstream for consumers and particularly corporates. I think when we first started talking, they were one of the first companies that was really looking at the opportunity of stablecoin linked corporate cards for businesses. And so being able to blend knowledge of the existing payments ecosystem, existing credit markets with the emerging innovations with stablecoins and smart contracts, we felt was really powerful and was the beginning of this next trend that we've seen, that we're talking about and seeing every day now, in this idea of crypto-linked cards are now becoming stablecoin-linked cards. And we think that there's a massive addressable market to be able to grow these programs across the world. And it's been exciting to work closely with Farooq and the Rain team to do it.
Yeah. I think about I don't know how much you can share, so just I'll always drive us deeper and you stop me when I'm going too far. But Cuy, when you're talking about some of these exchanges or partnerships, my mind goes to really my first experience with a stable coin or a crypto backed card, which was the Coinbase debit card. I believe it had USDC or Bitcoin rewards. Were you guys working on that relationship, or I think that was a Visa card, I believe.
Yes. Yeah. There's a live Coinbase Visa card today. We have a crypto.com, a Visa card. We've worked at dozens of exchanges across the world. And I think some consumers have used those cards to be able to off ramp stablecoins and use them for day to day spend. Other consumers use them when they have a balance of a crypto asset. But I think seeing more and more companies coming to us that aren't really touching anything around crypto assets, they're just focused on stablecoins. That's been one of the latest trends that we're really excited about.
Amazing. Farooq, when you were in this point, it sounds like when you first met the Visa team, you were doing the corporate backed card, I believe, at this point. Maybe in sort of framing Rain for people who may be just meeting you guys, I'm curious to dive into your vision for stablecoins. And like, as Cuy mentioned, it sounds like that was something that you guys were very native with, very convicted about since the beginning. I would love more of the story of where you've started in that and how that's graduated from corporate to now more consumer or retail focused use cases.
Yeah, for sure. So, I mean, when we started Rain, when we started exploring kind of the stablecoin space in 2021, Charles, my co-founder, and I we'd been working on a side project together, and it was like a document generation tool that allowed people to do angel investments for startups. And we'd built that on top of ACH Rails. And early customers had come to us and said, hey, we have some angel investors that want to write checks, but they want to be able to fund that in USDC. And we had some idea what USDC was because we were exploring kind of DeFi and NFTs, et cetera, independently. And we were like, okay, well, let's see if we can just add support for this. And we added support for bilateral wallet to wallet stablecoin transfers on top of like a safe note, DocuSign, et cetera. And the delta between the ACH experience was like, ACH was taking like 7 to 10 days to get from the person who was making the investment to the company. And it was painful enough where like our customers were like, hey, did you guys steal our money? What happened? Where'd it go? We're like, no, just wait. It'll show up eventually. And then when we added the stablecoin rail, it was just instantaneous. And so that was when we had a bit of an aha moment that like, hey, digital money is here, and being able to transmit value between one person and another without an intermediary is also here. And it reminded us of like much of the innovations of like what cash has given society over the last like several thousand years, which is the ability to transact without an intermediary, right? And so that's when we kind of started clicking in our heads that, hey, stablecoins as a transmission of value, as a store of value, as an economic instrument, the day is already here. Like people are asking to use it like money, and they want to make investments with it. They want to transmit it from one person to another to buy goods and services or affect a contract. And when we started digging deeper into that, we started realizing that there was already very legitimate money-like use cases for stablecoins. There was this entire industry, this digital asset industry, which was growing, where the native currency for that was stablecoins. And a lot of the people that were building NFT projects or DeFi protocols or token protocols or doing ICOs, all of these people, for the most part, were businesses. And businesses, the whole purpose of a business is to make money. And what we were realizing when we started going down that rabbit hole of figuring out like who are the early adopters of stablecoins as like a actual replacement for fiat money, we realized that companies in this ecosystem had hundreds of millions of dollars, hundreds of thousands of dollars in some cases, billions of dollars in other cases, but they weren't able to use any of that money, right? And so a big part of why we started with corporates and we went to Visa to start a corporate card program was because we realized that early adopters for stablecoins as a financial instrument, as actually money, as a purchasable goods and services currency, were businesses, right? Because they had to buy, cloud spend, they had to pay for ads, they had to pay for travel for their people, they had to pay for hotel rooms, rent, all these other things. And so we realized that in order to start building the product in 2021, early 2022, we really had to start targeting the industry that already was treating this like money. By starting there, we found a willing partner in Visa. We built our first card program for corporates. It was a crypto-backed or stablecoin-backed charge card, and it's still live today. And that was a big part of how we were able to develop our infrastructure, how we were able to get to market, how we were able to grow and kind of build what is now a very comprehensive sort of API offering as well as a product offering under the hood that allows pretty much any of our customers to come in the door, plug into our APIs, and then spin up either a card product powered by stablecoins for businesses or consumers in a variety of different markets, all in partnership with the card network. And that's really been, a big part of the unlock over the last several years.
So this is around, it sounds like 2022 era. We're entering at that time sort of like a post-hype, post-bust reality where I think a lot of people are probably thinking like, should I pivot to a new industry? What's worth working on? That was an interesting 2-year period. Lots going on around that time. Zooming into you guys, you meet around this time, and you guys are now thinking about, Cuy, from your perspective, we have these existing exchange relationships, these really interesting partnerships that you've forged where crypto in the card, like crypto broadly from a card standpoint, has become really interesting. Tell us about the evolution that from your perspective you've seen in recent years since that point when you guys maybe met, where you saw what I'm guessing might have happened, where this crypto focus actually turned into a stablecoin focus, and what that was like from your vantage point.
Man, there was so much value created in 2022, 2023, like in the stablecoin ecosystem, that the people who were building then are now the ones that are benefiting now. So I think the other element that got me really excited is, we spent a lot of time at Visa thinking about how can we use stablecoins, to improve the way that our network operates. And, what a lot of people don't realize is while VisaNet is this amazing, 24/7, authorization layer, and we can authorize transactions all over the world, 65,000 transactions per second. It just works at 150 million merchants. We can't actually move the money in real time. Like, we're very much constrained and dependent upon underlying bank settlement infrastructure, whether Fedwire, other types of gross, value transfer, systems that don't work 24/7. And so it was always amazing. I'd go down to Foster City and I'd spend time with our treasury team. And I realized like bank holidays are a real challenge. Like in 2023, 2024, it's like bank holidays. And if you operate a global business, it's not the same bank holidays in every market, every place. Every country has their own holidays. And so there are just random days where you can't actually move value that you then have to plan for. And then it creates, buildup and things in our system like credit risk, where what happens if you have authorizations, that are approved on a Friday, and then you have bank holiday on a Monday, and then you don't get paid until Tuesday. And so it was just astounding to me that like we're the most powerful modern payment system operating at scale on the planet. We still struggle to actually move the money underneath the transactions that we authorize because there aren't great settlement rails that work all the time. And so we started experimenting and just saying, if nothing else, what stablecoins could become is just a new modern global settlement rail that works 24/7, that you can transfer dollars over, that doesn't take bank holidays. And so I started thinking in a crypto way, it's almost like VisaNet could become a layer 2 on top of stablecoins as a new settlement network. And so how can we take the best of both worlds, what we can do on the authorization side, our global acceptance, and combine it with what stablecoins do really well, which is 24/7, real-time settlement. And so we had crypto partners that were excited about it, that they were using stablecoins, and we started to roll out some, initial pilots, with some of our crypto linked card programs. But to me, it was, how do we really scale this and automate it, and make this a default way that a new generation of fintechs could actually interact with our network, where we could accept, and settle those funds, and not just do it 5 days a week, but in a stablecoin, but being able to do it every day of the week, every day of the year. And so I think when we got to know, Farooq and team, I think we had a similar vision, and we're super aligned around this idea of, let's create card programs that are stablecoin native, that actually use blockchains to be able to move the funds and can do that more frequently, more efficiently than what you can do, with Fedwire today. But to do that, you have to really understand how to move stablecoins in an automated way that's secure. What is the value chain from the end consumer or corporate to the issuer, then to Visa. We had to have the capabilities to receive those stablecoins, to be able to redeem them for fiat, to pay out acquirers. And so I was really searching for like, who are these next generation issuers that see this as a game changer of a way to operate a card program that can settle on chain, and then how do we build with them? And so we started to spend a bunch of time together on this idea of stablecoin settlement, and then having Rain go live as really the first automated 7-day a week settlement partner who's settling with us. They just settled with us last Saturday. Most partners in our network, you can't say that. And I think it's uniquely because of the fact that they're using stablecoins as this core underlying financial primitive. And having a partner like that has been able to push us to continue to grow and scale the capabilities that we have. We're adding support for more stablecoins with USDG. We're adding more blockchains with Stellar and Avalanche. And so being able to move into this world where card network settlement is always on, works 24/7, multi-stablecoin, multi-chain, like that's the future direction that we're going. And it's really in response to the demand and the growth that we've seen from partners like Rain.
Yeah, fire me up. This is amazing. So Farooq, I'd like to just, before I get too excited and start going too deep, I'd like to back up and I'd like to help people think how you both as companies fit together. And I think a lot of people who listen to this podcast they're stablecoin curious, they're fintech native or are familiar with some of this stuff. But I think a lot of them would be lying if they said they really understood how the pieces fit and specifically who does what and how. So maybe Farooq, you could walk us through like an example or a client or case study that you think of that could help illustrate how these two pieces work when a payment is made or when a merchant comes in and wants to work with you guys. I know for me, I use Dakota with our business bank and you guys work with them. I don't know if that's a good, helpful one, but maybe we start there.
Yeah, I mean, for sure. So like, I think at Rain, our big focus has been on the technology and enablement side, right? Visa, I think historically and even today, like their focus is really on being that connectivity layer between merchants and, acquiring banks and issuing institutions, and just being that information layer between buyers and sellers, or people that represent buyers and sellers, or bank buyers and sellers. And so for us, like we realized early on that stablecoins as a store of value, as a transmission instrument are very powerful. We also realized that to get merchants to accept them today is going to be a very difficult task. I mean, look at Visa and you look at MasterCard or even American Express or Discover, like these organizations have been around for decades, right? And Visa has been around longest and has spent the most time acquiring merchants and issuing institutions all over the world, so that whenever a consumer like me or a consumer like you or a business owner like you goes and taps or, inserts their car at whatever terminal anywhere in the world that accepts Visa, it just works. And so the way that we realized that, we wanted to build our business was to solve for that utility problem first. And that's why we went to Visa. So like Visa has the world's largest network. We were able to get access to every single merchant on the Visa network by engaging with Visa day one, right? And so that's the biggest part of the pie that we tried to solve early on. And by solving that, we realized, okay, if we can make stablecoins usable and acceptable at every merchant without having to go to tell any merchant, hey, this is stablecoins, whatever, it was going to solve the business problem for our customers, which was, hey, I have a currency which is not really acceptable at most places around the world. How can I still spend that? And so we became their market maker effectively on the other side. And we started on the credit card rails largely because the regulatory landscape at the time in the United States was going through its own fact finding, and it was unclear where rules and regulations were going to end up. And doing it on credit seemed at the time to be the easiest pathway to kind of avoiding many of the challenges of regulatory uncertainty. And so that's how we started off. And then on our side, right, like we built all the underlying infrastructure, all the blockchain technology to authorize transactions on any different blockchain. We have native deployments on over a dozen blockchains today. We support, we're issuer agnostic, so we support any stablecoin, whether Visa accepts that or not. And then we can kind of automatically get into the settlement stablecoins that we settle all payment volume with the card network and with the Visa team today. And so the way that our technology works is that everything has been built from the ground up to be stablecoin native. And so all of our customers settle with us in stablecoins. We settle every payment directly with Visa using stablecoins. And now that Visa is accepting additional blockchains, we're going to be settling with multiple blockchains with the card with the Visa team over the next several months as kind of our customers have expanded to the various different blockchains that Visa accepts settlement on. And so that's in a nutshell how everything works, right? Didn't spend any time rolling up every merchant because Visa had spent the last 5 decades doing that already, and we got to spend the time building what we realized was the missing link, which was how do you make on-chain assets interface with a Visa message that comes in from the Visa network. And all of the technology from receiving the network message and the authorization to actually putting, an authorization and a decision into the network, all of that stuff is proprietary. And we can actually authorize a transaction within 200 milliseconds, which is less than the Visa SLA on any of the public blockchains that we support. And we can actually prevent double spending. We can make sure that those funds will be available for settlement whenever the settlement cadence is required. And then for all of our partners that we empower from a enablement perspective, each one of those clients has an on-chain reserve where they're purchasing receivables from us or they're doing settlement with us on the blockchain. And then even beyond that, we have expanded the technology to now include like warehouse partners or receivable financing partners, where we can programmatically pull down debt to fund a receivable obligation and originate a receivable for a warehouse program for any number of card programs that we power today. And so everything that we've been focusing on has not been like, we've just tried very hard not to kind of use stable coins and stablecoin branding as an excuse to pretend to have a crypto program, right? Or a blockchain enabled program. We've really spent the time focusing on how can we be the de facto technology partner as more institutions want to engage with Visa down the line, as more people want to launch stablecoin backed powered programs over, multiple jurisdictions. And at Rain, we're really focusing on sort of expanding the technology stack, making sure that it's audited, it's certified, it has real transaction volume, but then also expanding our licensing footprint so that our customers can continue growing across multiple markets in coordination with the Visa team.
It's amazing. Maybe just from my own understanding too, like Cuy, you mentioned that even last week there was some chain support that you guys rolled out. I think you said Avalanche and Stellar. What was it like before then? It sounds like there was some sort of gap that working with Rain has been able to fill in some of these ways, where because they work with one of those types of chains or assets or issuers or whatever. Is my understanding essentially correct there, where you guys, Farooq, could settle maybe things that Visa can't support yet or hasn't supported historically, and then maybe you settle it to an asset they do or a chain they do, and then you give it to them? Is that kind of the way that it works or it has historically?
Yeah, I mean, we can support sort of any number of tokens, and it's very straightforward for us to add additional support because we own the whole technology stack, right? I mean, I imagine that because we're not a massive publicly traded payments network, it's a lot easier for us to add support for new tokens or new blockchains. I'm not going to speak for Cuy. I'm sure that he has lots of battles to fight whenever it comes to adding new distributed ledger chains or tokens. I'm sure that there's a whole process. But on our side, we support the things that we get comfortable with, right? And we can get comfortable because our clients are asking us for it. Sometimes we have relationships with different blockchains where they come to us and say, hey, we would really like to embed this type of capability that Rain powers onto our chain. And then we have conversations with them. We have stablecoin issuers come to us all the time and say, hey, can you add support for our token? We want to make this usable as a settlement currency for transactions around the world. And so for us, like, we've really spent a lot of time building a technology infrastructure which is agnostic, because our thesis is that the winning blockchain probably has not been picked yet. And most likely will be different blockchains in different countries, right? The winning token will probably be a different token in every different market. Might be multiple different tokens in every single market because regulatory clarity in every other country in the world has not come yet. And so our thesis has been that how can Rain have a future in this market, regardless of which blockchain wins or which token wins, or, maybe none of these will win. Maybe CBDCs will win in market X or market Y. And so our thesis has been that, much like companies like Fiserv and FIS and, Marqeta and Lithic have been really instrumental in the growth of, payment cards around the world, we think that, the future of tokenized money requires a tokenized native technology partner.
Yeah. Cuy, any thoughts on this?
Our general vision, I think, has been that we need to be multi-stablecoin, multi-chain. And I think we agree with Farooq that there will be more stablecoins exist in the world, and there will be, more blockchains. I think what we've done, and anytime, you're interacting with, a network that's moving trillions of dollars of value, is we've wanted to be able to roll out these capabilities very carefully and taking the appropriate steps and processes, to do that. So when we started, it was just USDC on Ethereum. And so that was really the first step, running water through the pipes, getting people comfortable with how does this actually work, opening an account with Circle, learning how to be able to redeem. And it's important to recognize that in settlement, the two sides are decoupled. And so you have issuers, who could choose to settle in a stablecoin that we support if they'd like, but they don't have to. They can choose to continue settling in traditional USD or in one of the 27 currencies that we support. And then you have acquirers that can choose which currency, they want to receive, and many receive the currency of their home country. And so we need the ability to receive the stablecoin, redeem to fiat, and pay out to the acquirer. And so if you think about it, I like the analogy of, it's like our treasury historically has been two-dimensional, where we can receive dollars and pay out one of the other 27 currencies that we support. And so we've gotten really good at scale and enabling FX, receiving one currency from an issuer, paying one currency from the acquirer. And then you add a third dimension to say, okay, it's not just currencies, but it's form factor of the currency. And so you owe us dollars. Do you want to pay us in traditional dollars or a Fed wire? Do you want to pay us in USDC? Or now do you want to pay us in USDG? And so now you have to be able to delineate between kind of what is the format that represents that currency and what's the delivery mechanism for how that currency is going to get to you. And then depending upon which currency it is, where are you going to go to actually redeem it, for traditional USD to then do FX into the other one. So that's the third dimension. And then you get to the fourth dimension, which is the blockchain. And then to say, okay, well, which currency and which brand of a stablecoin running on which blockchain. And we still need to be able to receive any combination of that and be able to convert into any other currency, on the other side. And so we're adding this fourth dimension, and each time you add one, then it increases the complexity. We've got a number of treasury management systems that we want to update to be able to identify, to know which currencies, which chains, which stablecoins are coming in. But we've been able to make a ton of progress. And I think a big part of it, and this is something that I say to most of the large institutions I talk to, the earlier that you can start to send and receive your first stablecoin transactions as an institution, the better prepared you are for the future. And that's kind of what settlement was. It's like running water through the pipes. It's kind of akin to, I wasn't around them, but like at some point, someone decided for Visa to get our first internet connection and to set up our first website. And I would imagine that the earlier that a corporation set up an internet connection and created their first website, the better prepared they were for the internet. And so my goal early on was like, how do we push the organization to get our first stablecoin blockchain connection, be able to receive and send money on chain? And once you learn to receive and send money on chain, that's the first step. And then you could start to build a lot of other capabilities with it. But for any large institution, being able to integrate new providers, explain how a blockchain works, what happens if the blockchain goes down, what are the fallback mechanisms, how do you get notified if that happens, and then where do the funds go from there? There are all of these things that you have to think about that makes it, you got to be careful as you add these additional chains. But to us, it's just been, even in the bear market, nobody cares about stablecoins, days of late 2022, early 2023, like we were every day, like, how do we send and receive money on chain? And like by doing that, now that we're in this point where we have regulatory clarity, where we've got demand, going through the roof for these stablecoin like programs, now we're better prepared to be able to scale it, to add more chains, to add more stablecoins. And I think that there's a ton more that we can do. And so this is really, to me, like the base foundation layer of the platform of turning Visa's treasury from 2D into 4-dimensional, building this world-class intersection of fiat capabilities and stablecoin capabilities that we think we're going to be able to apply to many things down the road.
Yeah. I want to talk with you both, just given the focus of this episode around stablecoin linked cards and the use cases of them currently. When you were mentioning like the first getting institutions their first stablecoin send, getting them onboarded on chain, like I'd imagine it's kind of evolved from go get an institutional account set up, go through some onboarding and like check all those boxes. And I've been on that side of things too. To now it's like, hey, you can actually just download this app or do this thing. And it's actually really straightforward because now there are many different um, companies or apps out there that can get people a real sense of how this stuff feels and how fast this moves. Like, what are you seeing from certain trends or things across the world for stablecoin programs today? Would love to know more around things that you see in this moment, the things that um, maybe you guys see because you're a little behind the curtain here versus maybe what people are noticing publicly.
You want to go first, Guy?
You start, Farooq, in terms of the day-to-day spend, yeah, that you're seeing on your cards. I think is a good starting place.
Yeah. I mean, look, I think, Drew, one of the things that we're seeing, right, which may be surprising to some people, is that we're seeing regular payment transactions, people spending the money as they would spend normal money. It's not anything kind of novel, right? Like we're seeing people use Visa cards to buy coffee and buy airplane tickets and go to Disneyland, right? And all the stuff that you would normally see anybody doing with any kind of payment card, right? We also see businesses paying for ads and buying goods and services and, purchasing, stuff from, large global merchants like Amazon or Alibaba or Walmart. And so we're starting to see kind of very straightforward, common use cases emerging across the customer base. We have a variety of different customers that we power today. So we have people that are building kind of a USD neobank for people in Latin America. We have people that are building like a freelancer payments app to help people kind of earn and hold USD around the world. And we have people that are building payroll solutions where instead of you receiving, local currency as part of a payout, you can now, have your payroll partner hold dollars and stable coins and give you access to kind of earned wage access in a lot of these markets where you don't have an earned wage access solution. And so we're seeing, every single type of traditional fintech use case being powered by stablecoins under the hood, right? For us, a big thing, like our big thesis here is that stablecoins are just money and it's just an enabling technology that changes a lot of the underlying economics of how money moves. And you don't necessarily need to pay, a large financial institution a massive monthly minimum or a massive setup fee to launch a program anymore. You can actually use stablecoins as a replacement for a deposit product, for example. Not that we're providing any of that deposit capability, but you can bring wallet infrastructure. You can work with institutional custodians. We have some people that work with banks and they work with institutional stablecoin custodians. And so we're seeing every type of major sort of fintech use case now be powered through stablecoin infrastructure under the hood. And that's the exciting part, right? It's not this crypto stuff that people generally expect. It's very traditional vanilla use cases. We have a number of programs where if you were to actually interview the individual end user and ask them what a stablecoin is, they would have no idea because for them, it's just a dollar balance that shows up on an app on their phone and they use it and it works everywhere, but they tap it wherever they see the Visa logo, right? And so that's really what gets us excited is these use cases where it's net new people into the stablecoin ecosystem, right? Like they're being powered by stablecoins under the hood and the user or the individual or, in some cases, and in all cases, like the merchant doesn't necessarily need to know that this is a stablecoin transaction. And that's the exciting part, right? I think that's where you start crossing over into what is possible longer term. And then I'll tell you something really cool we're starting to see now, which is we're starting to see the first closed loop transactions happening. I think Cuy alluded to this earlier. Stablecoin settlement with the network is, we're an issuer. We settle payment transaction volume on a daily basis with Visa today using stablecoins. And then there's merchants. I think you guys have been doing this much longer than the issuing side, right, Cuy? Where like merchant acquirers or merchants have been accepting settlement in stablecoins on the other side. And we actually work with one of the world's largest merchant acquirers, and we provide Rain account infrastructure for their merchants in Latin America. And they're starting to see the acquiring volume show up into a Rain account that then they can spend again on the Rain powered card and where that settlement will then go back to Visa. And so we're starting to see closed loop transactions happening sort of on top of the Visa network where we settle a token to Visa. That token shows up in a merchant account that we power on the other end. And that's the really exciting part.
Wow, that's amazing.
Yeah, I think the general takeaway is in emerging markets, particularly in Latin America, as one of the places that we've really started in with Rain, we're seeing stablecoin linked cards just become top of wallet general purpose cards. And we hear consumers that use the term dollar card. That's just becoming a thing of, oh, I've got a dollar card, and the fact that it's a stable coin running on a blockchain, like that's not as important. It's just it's clear that there's demand for dollars in many of these markets, and stable coins are supplying that demand. But if you have a dollar that you can't really spend anywhere, that dollar doesn't really have utility. And if you have a dollar with a card that you could spend any place that Visa is accepted, that just can become a top of wallet financial product. And so one of our biggest priorities is just how do we expand into more markets? And one of the reasons that we see stablecoins as such an opportunity for Visa is many of the markets where we see the greatest demand for stablecoins and as a form of digital dollars are markets where there's relatively low card penetration, where there hasn't been nearly as much fintech innovation of great new products that have come to market. And so we're trying to figure out, how do we work closely with our issuers and enablers like Rain to make it as accessible as possible in as many markets as we can, to reach these consumers. And if you can do that, not only does it just help the consumer and Rain, it helps create this like platform for fintech innovation where you have all of these new stablecoin neobanks and global Venmos and all these wallets that are built that we think have a real opportunity to get traction, if a card is part of the value proposition versus if they show up to the market and there's no card, there's no easy off ramp. It's hard to have a product that is just saving without spending. And then if you have to have an additional cost every time you have to, off ramp, get funds, back into your core, bank account. And so that's one of the things that just gets me really excited is that the barrier to entry to build new types of fintechs and financial services products is getting lower and lower by the month. There's so much more infrastructure that's available. And I think that could be both global products that are built that work everywhere from day one, or that could just be regional, local entrepreneurs who couldn't, raise the money and go partner with a local bank, but can now create a product that is customized, towards their region. But we think that the common denominator that all those products should have is that they should be born with an embedded Visa credential inside them. And so then you have all of the power that you have of any other financial product that can become top of wallet. And so that's why it's really cool to see this playing out, and not just stablecoins are this thing for crypto people to use to buy something weird that's like crypto related. It's like for normal people to buy groceries and spend in the day to day. Like that's the direction that we see.
Yeah, it seems like it's like stablecoins themselves have allowed Visa to enter new parts of the market that you mentioned weren't accessible before, or maybe less tapped or less. Tell me more about that. Like, what has existed historically that you think has prevented that? Around, I'm just imagining like local banking or just the nuances of those economies. I'm imagining like emerging markets when you say that. What has existed that's been barriers to entry there, and how are stablecoins like shattering those?
I'd say step one, there haven't really been global platforms for fintechs. Like if you think about fintech and the first one or two waves of fintech, it's been mostly focused in the US and Europe. It's been mostly driven based upon banking as a service. And so you have to go and find a bank, and a lot of large banks, they're not really incentivized to provide APIs that are easy to develop on for the fintechs because they don't want those fintechs to compete with them. They want to own the consumer interface. And so it was really like specialized fintech focused banks who are available in the US or available in Europe that are providing modern APIs that enable developers to build on top of. But then historically, if you wanted to build a product that was global, they wouldn't really support that. And for a number of reasons. And I think that stablecoins are the first time that you almost have this global banking as a service layer that any fintech entrepreneur can build a dollar denominated product that works in any country. And so I think just getting that base level of the products can exist. Then once the products can exist, where you don't have to go and convince, a local bank in many of these markets to offer an API to build on top of. And many of the local banks in these markets have trouble sourcing and getting access to dollars in the first place. So good luck as a fintech going in and saying, hey, I'd like an API to a dollar account built on top of a local bank with an unlimited amount of dollars that I could then supply to my long tail SMB consumer. Like that just didn't really exist. And so you've got this new foundation, this new platform that fintechs can build a product on in the first place. And then we can come in and say, all right, now that that product exists, now that you have a wallet where consumers have a balance, how do we then add a card, to that wallet where before there just weren't even those wallets. And so I think that was the first piece. And then we're just trying to figure out like what is the best way to make these programs as compliant with local regulation, as easy as possible to operate, being able to settle in stablecoins, and then to really have this competitive ecosystem of fintechs that can innovate and create many different types of experiences that add a lot of value to consumers in these markets. And we should talk more about the programmability element of stablecoins and some of the lending work that Ferg's doing that's really cool. But I see like stablecoin linked cards are some of the most powerful financial products on the planet because you've got all of the benefits of stablecoins, which can do so many things from cross-border payments, to on-chain lending markets. They could earn yield in different ways. Like there are so many things stablecoins do, but the thing that they can't do is be spent at merchants. That's like they can do all these things except for being accepted at merchants. And so then if you have merchant acceptance combined with stablecoins as a developer primitive to build any use case you want on top that uses programmable money, like that combination together, we just think is incredibly powerful.
Farouk, where do you see, given what he just said, the credit stuff coming into play, consumer credit stuff? I know you guys, I was talking with the Credit Coop team, folks like that. There's a lot of exciting things going on there.
Yeah, look, I think for us, I mean, it's what Cuy said, right? Stable coins can do a lot of things. They're programmable. We built all the infrastructure to program them to do various different things. But at the same time, acceptance at merchants is the only thing that really matters to a consumer that's looking to pay for something, right? Or buy something or go somewhere or stay somewhere. And so that's really paramount. And then everything that we're focusing on here is really how do we continue driving the industry forward? How do we continue using stablecoin infrastructure as a viable alternative to the traditional way of doing things? And how do we continue driving economies of scale to let people continue building new solutions that maybe were not previously possible because it might cost too much. It might not have been available with any of the local partners that you would have normally had to work with. Or you would have to be building a solution without access to dollar infrastructure, but now you can provide dollar infrastructure in some of these markets. And so for us, like that's been paramount, which is how do we continue pushing the envelope? And then the other thing that's been really exciting to see for us is that we've had a number of customers that were wrong about their initial sort of go-to-market thesis, right? Like they said, hey, we're going to build X for Y. And they realized that X really resonated with Z. And with Rain, we were able to support them in both X market and Z market. And that's the magic of stablecoins. And that's the magic of kind of stablecoin enablement, right? And our relationship with Visa gives us that dispensation to be able to provide that type of utility across a couple of different geos. That's made the difference for our customers to actually having to shut their business down and lose a bunch of money and having a vibrant, growing, massive adoption fintech app that's now available in a variety of markets. And so that's kind of really encouraging for us to see, because if you look at our metrics in terms of like user churn or like cohort retention, et cetera, and you compare that to like any other fintech enablement platform, ours is so different because we haven't seen that amount of early stage failures that others see, because the way that we do it, we allow our clients to have a little bit of flexibility in terms of like what type of offering that they're bringing to market and who are they targeting, right? And so sometimes an ad could accidentally get clicked by, user A, and you don't even know user A needed the solution, right? And so that's the kind of really interesting stuff that you can do with stablecoins and stablecoin like payments. And I mean, that's the exciting part, right?
Yeah. I know we're rounding third here, and Cuy, I know you mentioned you have a hard stop. Maybe last question for us, because there's so much here, and Cuy, maybe to start with you. The impact of this seems pretty significant just in terms of Visa's business, Visa's existing business, how you guys think about the future, how this impacts local economies, underbanked areas of the world that haven't received enough access or enough ability to innovate, enough velocity of money. Cuy, just when you think about the impact that this would have to just the market generally, maybe Visa specifically, or just the market, what do, in your view, stablecoins do to these emerging economies, whether that's like the businesses or the people there, and then Visa's also role there in that right?
I think for Visa as a business, we want to put a Visa card in every stablecoin wallet. And like we think we can become the acceptance network for stablecoins. And I think it's a much better consumer experience getting access to 150 million merchants on day one instead of having every merchant have to adopt a new technology that they don't really understand, consumers having to change behavior. So we think that that's a massive opportunity. And I think stablecoins in general, they have the potential to increase the velocity of money. And I think we're seeing that even in these early examples of we're able to have a higher velocity of settlement value that moves through our network. If we can receive it in a stablecoin, we can receive it 7 days a week. If we receive it in traditional fiat, it's only 5 days a week. And it's just really hard for me to imagine a world in 2030, you're going to have, who knows, robots running around and, spaceships, launching it. Like we're not going to be able to move money and circulate it around the world globally. And like, we're still going to rely on bank holidays and we're still going to have, wire cutoff time. None of that makes sense to me from first principles. And I think stablecoins are the first technology that enables money to move at internet speed. And I think as this like core foundation layer, there are so many products that can be built if you combine the speed and the programmability together, that if you increase the velocity of money, you increase how quickly economies can grow. And I think ultimately it's fundamentally good for the world. And I think that's one of the reasons that, I'm so excited to work at Visa today is I think stablecoins are good for the world. And I think that there's a lot that Visa could do to help accelerate the adoption of them. But it's going to be a lot of work. And I think it's just a grind every day, making a little bit of progress of how these systems can intersect, together. And it takes partners, like Farooq and Rain, and being able to build with them and learn from them to be able to reach the end consumers and merchants that benefit from it. So we're really excited about the space.
Stablecoins are good for the world. Farooq, any final thoughts from you as we close out here around just what gets you optimistic? Maybe why specifically you think stablecoins are good for the world and your own personal belief. I'd be curious to hear that from you.
Yeah, look, I think Cuy really nailed it on the head, right? I think, economic freedom is important. I think money velocity is important. I think access to high quality financial products for people in even small markets is important. And I mean, I'll go back to one of the things that Cuy said earlier, right? Which is one of the really exciting things that we see, and Cuy also sees it, is that a lot of the products that we power today, the replacement for what the user was using before is not an existing card program in a domestic market. It's cash payments, or it's like kiosk payouts, or it's like a, Swift payout or something like that. And so we're saving, people a fair bit of money by providing a card payment infrastructure for stablecoin payments. But then on top of that, like customers are actually transacting in ways that they haven't been able to do before, right? And so they're holding money in kind of a non-volatile currency. They're able to spend for services without any additional fees in most cases, and they're able to continue getting all the utility that they were going to get when they went to go pick up cash at a local kiosk, because they can still draw that money out at an ATM, anywhere in the world. And so that's really been one of the coolest things that we see, which is this like replacement and digitization of like a cash transaction or a sort of more antiquated, more expensive transaction infrastructure. And we're just excited about continuing to grow that and continue to power and build more infrastructure so that more people can build more solutions in more markets for, consumers and businesses around the world.
Crypto payments has a big spectrum. You have the luxury watches, NFT, sort of that side of things. And then you have, I think in many ways where Rain sits and Visa sits, with normal, boring, cash-based, where money really lives for the majority of the world in that sort of daily, day-to-day sense. So thank you guys for the work you're doing and the ways in which that you're collaborating. I think you're really accelerating the space forward because you both are playing strategically specific roles. So thank you again. Excited for this. And Rain and Farooq, thanks again for powering the season. It's been a fun one to record.
Thanks for having me.
Cool. Thanks, guys.